What is going on, guys, and welcome on in. Happy Sunday night. As we speak, we are taking a look at futures right now across the board, and we're red. So, we still got to, obviously, overnight, a lot can change as we kind of see that a lot of things can bounce around during that time frame. But right now, as we speak, we did finish the week down. So I'm going to pull up FinViz really quick, give us a good kind of, at least screen for what happened last week, how things kind of finished up. And then this hopefully can kind of play into what we're looking at for this week, right? So with that said, across the board, NASDAQ down about 1.5%. Not the NASDAQ, Dow down 1.5%. NASDAQ was roughly even on Friday. And then we saw the S&P down about 1%. Now, the difference here was that despite all of this stuff that we saw last week, right, to finish off the week, small caps, IWM, that was green. So the question is kind of like, okay, is that shift, is this the start of the shift? Or are we going to see, a move out of some of the big name tech plays, the big name, large cap, the mega cap plays? Are we going to see a movement from some of those? And are we going to see that movement into small caps? That was kind of the idea. Like, okay, let's see if this continues. And this coming week is going to be a big signal for that. Now, are we going to see that tomorrow? I mean, as of right now, if the overall market's down a lot, probably not. When you have the negative sentiment, potentially more fears, virus fears, and all that good stuff that's been going on, yeah, you're probably not going to see that. But, anything could happen, right? We obviously just looking at futures right now, a lot could change going into next week, right? So who knows? But there's actually a lot of even going back to the pandemic plays, like those COVID plays, that we can start looking at again. So I think Zoom is one of those we need to look at. And there's a lot more that came from. So we'll dive into some of those here in this video. So again, looking at futures, let's see. Across the board, looks like the Dow is going to be down, at least futures-wise, down a little over 0.5%. S&P down a little over 0.5%. Tech, same thing. NASDAQ, same thing. But look at this. Small caps down about double what everything else is at. So you might see that exact reversal right back. So it might be like, okay, all of a sudden, one day it looks like small caps are good. Next day, they're not. And it's back to the same story. So we'll see if this holds up into tomorrow. A lot can change. But we shall see. We shall see. That said, I did want to start. Let's pull up our Webull desktop app here. I want to start with Zoom because Zoom is probably the place to start when it comes to some of the positives going into tomorrow. It doesn't really matter what the market's going to do, in my opinion, going into for Zoom at least on this play. So let us look. I want to pull up ZM is the ticker. And look at what we kind of saw. So we kind of saw on Zoom this past week, it did hit about 175. And then if we zoom in here, look what it did on Friday. So this could be very, very telling as to what may happen this week. And the question is going to be, though, with a stock like Zoom, right? What do we see going into this week, right? If the market's super red tomorrow, if the market's super red this week, does Zoom is it going to be fine and do its own thing? Or do we see the weight of the market kind of impact Zoom as well? That's probably your biggest key for Zoom for a continuation this week. I think it's very, very possible we can see up into this 210 to 220 level. Beyond that, I would target up towards that 50 SMA, which is up here towards about 240. It's a pretty big move, but I think it's certainly possible if we continue to see the fears and everyone we're seeing more people going online, more schools going online, a lot of games being canceled, college games, NFL games, not canceled, but being postponed at least. A lot of college games are being, basketball games are being canceled completely, not rescheduled. So, all that kind of stuff. Why? It's because of outbreaks and because of all that stuff. Now, there's a lot of signs and people are saying that, across the board, deaths and hospitalizations are not nearly as bad as they were for different other countries, for the U.S. and whatever, for different stats. I believe I saw a stat from South Africa saying that, even though they're spiking in cases, hospitalizations and deaths and whatever is a lot lower than what it was on previous spikes over the past, couple of years, past year and a half. So I think across the board, if there is fears of the variant and whatever, I think those fears aren't going to be as big a deal. I think you're just looking at, the market using that maybe to kind of do its own thing and to kind of and to pull back, right? Using that headline, those types of headlines to pull back. And I think it's something you see all the time across the board with a lot of stuff. So that's Zoom. The question is for Zoom is, how much does this actually make? How much of a move we get here? Do we get a bigger move? Do we get that 240? Do we get more than 240? I mean, there's a gap up here towards about 330. That probably would take a couple weeks if we want to make a move back there. But is the sentiment, and do we shift our way all the way back to, all these pandemic plays? I don't know. We'll see. Closed after hours. We closed. See how funny it is? It closed just under $200 because there was probably a ton of open interest on the $200 calls. Closed right under those to make sure those expired worthless. And then in the after hours, what did it do? It floated back up and finished up over 200. Look at this push, right? It pushed over 200 and then boom, it just trapped you. Boom, finished just under, and then it popped right back up in after hours. So we'll see. Here's the 1 hour chart on Zoom, how it finished up. Pretty strong. I would have targets up into that 210 to 220 range. So personally, I have some calls for Zoom out just for next week. So I don't have a ton, but I took some of those in case we do get a crazy move on Zoom. I think I have a 210 strike price is where I'm at least personally. I grabbed it last second on a hike on Friday afternoon on a freaking mountain, so it was like a last second thing. But play momentum and also kind of fits the bill. Super oversold recently, and with pandemic fears back up, Zoom is one of those stocks that I don't think anyone is necessarily going to think is going to go away. You ask Kathy Wood, she's also got some Zoom. I think Zoom is one of her larger positions as well. Now, obviously, right, Kathy Wood and ARK Invest, right? Yeah, obviously go back to Zoom's history here. Yeah, they did really well from 2020 into 2021. Zoom went from a sub $100 stock to a $588 stock at one point, right? But since then, it's pulled back. So at some point, right, the reality is, okay, where do we see where is Zoom's true value here? Is this going to be a longer term option for a stock, that's going to be a growth stock long term? Or is this going to be a stock that has its little, pandemic run and it's like, okay, back to normal, no one cares? I think it's a blend of both. I think it certainly could come down more, right? But, we can get some pretty vicious bounces back up, of $50, $100 over the course of a couple days, couple weeks after, how far down it's come in this period of time. So that's one thing at least we're watching for this coming week. Let's take a look at SPY, just because I think it's really important here. We get rid of some of these lines to take a look at this and get a true feel for where we could come down to if we continue to see further downside. So let's go to the daily chart right here. We're at the 50 SMA. It looks like we want to come below this level on SPY. So key areas to watch, at least that I would be watching, is down into this range right here. The highs that we saw around 250, or it looks like 254, and then down towards the lows that we saw back, a few weeks back, down towards about 450, just 448 or so we dipped down to. Those are areas I'm watching personally on the S&P. So we'll see what happens there. I would imagine if we can't hold those levels, those lows, we may be coming down into that sub, 445 range. 430 is that 200 SMA, or 435 roughly is the 200 SMA. We haven't tested that in a long time. Let's go back and see that orange line. We got kind of close back around September, October last year, November of last year. Last time we were below that was the pandemic crash. And the 200 SMA is a pretty good indicator, to be honest, about like realistically to tell us, are we in an uptrend, downtrend, bigger scale, broader scale momentum, right? So above that, we're pretty fine, honestly. Until you drop below that, there's really no reason to be super concerned about the market. So a long way down to hit that. If we do, it would be pretty interesting to see if we did. It would be a great pullback, I think, personally. But it's, that would probably be a little, if we hit that relatively soon, it would be, I think it brings a lot of fear to the market, right? Seeing that, but we'll see. I think we can definitely do it because in the reality of things, right? A lot of these large caps, the big names, like Apple, right? Apple's not going to grow. Apple's not going to grow as much next year, right? Going forward, as much as we've kind of seen the past, 5-10 years, even recently. So what's the incentive to hold or buy more Apple right now, right? Let's go to Apple and take a look at how that's doing. And so these big names that kind of have been carrying the indices, where a lot of stocks have not been doing as well the past 6 months, right? 6 to 12 months. These big names, they could realistically pull back 25%. And if they do, well, then guess what, right? It's going to bring the overall market down, right? The Apples, the Amazons, the Microsofts, Googles, they can pull back a good bit. Amazon actually hasn't been up as much as Apple. I think Apple is one of those names that could certainly pull back. Like I could imagine Apple back down under 150 at some point next year. I think it's very, very reasonable to think at some point, and then bouncing back, obviously kind of playing the game of the market and how the market performs. Apple will probably be a big player in that, right? We shall see. Can we check out Uber? Let's take a look at Uber. Uber had a good week, I remember, last week, if I'm not mistaken. Let's take a peek. I've had a good finish of the week. Okay, so Uber's actually at an interesting spot. Has some key levels that I drew here. So my last level was right here at looks like $38 a share, which we're kind of hovering right around. And we closed over that. That's key. That's good. That's a good sign for now. But I can imagine Uber up into this range, getting back up to that 45, up into that almost that 50 range is certainly possible. As long as it holds this consolidation, of this level that we're looking at right now, as long as it holds up over 38, that's a good sign. If it doesn't hold over 38, I think we can certainly see some more downside under 35. So that's kind of one of those things I'm watching on Uber. But look at this. The volume has been noticeably, higher over the past, let's say, month or two. And we've been kind of pulling back. So it's good to see that. When you see the volume, a stock consolidating and the volume holding up and the volume looking pretty strong, it's a good sign. So, generally speaking, if you go back to kind of the volume we're trading back in October, we're trading, way more, 50 to 100% more volume each day in terms of, shares traded each day right now. So we shall see. We shall see. Let's see. Look at the 4-hour chart of WEBR. Let's take a look at this bad boy. Here's the daily, curling on the bottom right now on the daily. It looks like 1122 is the low. If you go to the 4-hour chart, look at that. Popped up here to about 15 and has started to come back. So here, 1115 is your guy. This is actually an interesting stock, right? Weber. This thing gets back up into kind of this consolidation from up in here. Where we go, up into that range. It's about a 20% move, roughly, 15 to 20% move. Very, very, nice, potentially in the cards for this stock too. Interesting. That's actually, I like that idea. That's a pretty nice idea. Zoom our way out. This thing was trading up towards $20, IPO'd, hit 21, and then it's been selling off roughly since, but starting to curl off the bottom for now. I like that. I like that idea. That seems pretty solid, to be honest. Let's take a look. I do want to pull up. Yeah, futures across the board red. Let's see how red they actually are. They're not as bad. They were down a little bit more when we first started, trying to bounce a little bit, but the question is going to be across the board for the futures, I think, to be honest, is if we do see a pretty big pullback or we open or a gap down in futures, do we see that kind of continue? We honestly haven't gotten too many days where we have a big move in the futures or a big move overnight and then a continuation. So that would be pretty interesting if we get that tomorrow, where like if things gap down or we open lower than we closed, obviously, because things do trade. There's pre-market hours, there's futures, there's after-market hours, right? Stuff doesn't just stop trading at 4 p.m. Eastern, right? If we gap down and then push further down, right, that would be very, very telling. Or if we gap down and then recover, right? Many times you get these big moves overnight. It makes it really difficult, to be honest, if you're someone who's looking for a trade or trading a trend. Sometimes with these big moves overnight, it can make it really difficult to identify like where a stock is going to go because it might gap up or gap down below a certain level, below a support or above a resistance, right? And all of a sudden it's like, well, now what? So you'll notice that I think a lot of traders in general don't necessarily like sometimes when things gap down, because if you're an active day trader, like you're looking for certain things to happen, you're trading options or you're trading even just any stock, right? And you get those big moves overnight, it kind of throws things off, which is why, people like to trade just shares or not deal with options. But if you're playing options, holding over, there's always that risk. There's always that risk, right? So, that's one of those things that, of course, taking a play like I had on Zoom, you run the risk of Zoom opening up down at like 190 next week and those options being worthless, right, that I have. Or Zoom opens up at 210 and those options go 500%, right? Just like that. So it's very possible we can see a move either way. With a super red market, that's my question for Zoom and some of these COVID stocks, right? Do we see these stocks pull with the market, or are they going to do their own thing? Because are these market fears COVID fears, or are they just COVID is the headline that's masking a bigger pullback that's almost, I think, needed for a lot of the big names? We shall see. That's the fun of the game, right? At this point. So, okay, I want to pull up. Let's look at some of these large caps because this is going to be very telling. Let's look at Tesla. I'm going to pull this guy up right here. Omicron, I think it spreads fast, pretty intense, flu-like symptoms, head and body hurt like hell. Yeah, I think that it's, the question, I think, to be honest, is that how many people, I think we're seeing less, but that's probably because of vaccines and because of how we're handling it now. I think it's just because we're seeing, to be honest, less super insane insanely deadly cases nowadays, or less as, I guess, violent. So, I wonder how the market will take that. But the question is going to be, or at least the way I see it for, let's say, like the airline plays, for some of those recovery plays that have to do with, or even like the Zooms, right? Zoom may if Zoom pops up really hard in the next like 2 months, right, in the winter, Zoom's going to be a great short, I believe, into the summer, right? So as things kind of come back to reality, obviously the overall market plays a role. But if things do pop up in its virus spheres for the next couple of weeks, at some point, I think you have to we have to understand that, okay, once you come out of the winter, go into the spring, things come back down. There's no guarantees, but generally speaking, things come back down. More people get vaccinated, stuff it spreads more, and people kind of become able to handle it, right, to some degree. And numbers start coming down, cases come down, well, then all those plays that, let's say, hurt because of the virus rebound, and then all those plays that were kind of inflated because of the virus, like a Zoom, come back down. So we kind of can see there'll be opportunities both ways. So the way I see it is that if we get more pressure on the airlines, so I'll pull up Jets. Let's take a look at Jets. This is just like a ETF for the airlines. More pressure here. It kind of showed a bottom. It tried to, at least kind of double bottomed here, like this upper 19s, around $20. If it does pull back further, well, then I'm just going to buy more. I'm going to get ready to buy more of the airlines, add another one of those options out to 2023, and sit back and wait for it. And I've kind of been somewhat trading around the core of that position. Like if we get a crazy up day in the airlines at any point after I bought some lower, and we get a crazy update, I'll sell one or two contracts, like one contract per each position I have in the airline plays. And then I'll look to rebuy those back if we see more pressure. If not, I still hold a core position for a bigger move. But if not, it is what it is. And if I can buy back, well, then I'm able to kind of mess around with my position, make a few bucks off of a pop, and then re-add a dip, bring my average back down, and kind of play it that way, and make a couple extra dollars overall at the end of the day. But not a huge deal. So that's what I'm watching there. The volume, though, has been pretty interesting. Look at the volume on Jets. I mean, it's pretty powerful. So is this being loaded up for a bigger reversal? I mean, I think they're realistically, at the end of the day, whether you have a time frame on it or not, I find it hard to believe that some of these airline stocks are going to be lower in 2 years, right, than where they're trading at right now. I find it very hard to believe, right? Obviously, anything can happen, right? Overall economy, overall world, right, conditions, and who knows. But I find it hard to believe that some of these airline plays are going to be trading lower than where they are right now in the next 1 to 2 years. I think this is the time that things bounce pretty hard, and I think that we have a pretty big travel boom in the next decade, right? Is kind of my anticipation. So being in early on that is kind of where I want to be personally. That's that. SPRB. Let's take a look at that guy. This one had a little pop right on Friday, right? So this thing popped up. The question with some of these is going to be. Let's take a look. So this thing hit 580. Let's see what happened on the 1 hour chart. Thing really had a nice afternoon. Hit 580 and then pulled back. Now we'll see what happens if we gap down. But when this is a stock that all these past runners are very important, because a stock makes a pretty big run of 100%, which the stock did. These are very interesting stocks to get so much volume. When they come back down, right, and they find their new support, maybe that's 450, maybe it's $4, maybe it's down towards 350 on SPRB. I don't know where that's going to be. But once you start noticing them and they start to hold up and they're like holding, and they're kind of flatlining instead of kind of just falling back off a cliff, the longer they hold, the better that you can kind of see a bigger move to the upside if you're watching this thing for a long play. Or if you're looking for a short, you don't want these things to start holding up, volume starts coming in, they start curling, and they start bouncing off the bottom. You don't want that, because then ultimately this thing can squeeze right back out and go back up and hit new highs. So that's one of those. That's been a kind of the play for a lot of the small caps. I've noticed. I personally I'm not really playing a lot of momentum based small cap plays. Like, no, I'm playing mostly like bottomed out swings, trying to find the value and kind of stashing money there for eventual bounces or for press releases, for catalysts and all that good stuff. That's kind of and always has been my small cap strategy. It's been, you go through phases where things are great, things are like, oh, it's tough, because you kind of go up with the ebbs and flows of the market and kind of where the money flow is. And right now the money flow hasn't really been in small caps, but individually we're kind of getting one or two plays that have those relief, runs. And look at this, SRBP was a stock that, this thing was trading way higher and has just been selling off for months. So you kind of have your relief bounce right now is what we're getting, right? So whenever this thing does find its support and it starts to hold up, that's kind of your key indicator for the next leg of a move, right? That's kind of how I see it. Also, like MJ, what do you think? Let's take a look. You know what I like? You know what I personally like? I like a lot. This MJ is an interesting spot too. Look at this. This thing is kind of like bottomed out right around the same level it was bottomed out this time or a little earlier last year. I like that as an idea. I like MSOS, MSOS. That's I guess how you can kind of say it. MSOS, kind of same deal. It's kind of hitting down. It could come lower for sure, but I like MSOS kind of as a longer term cannabis play. Why? Because this kind of takes on a lot of the OTC US companies that will boom at some point, right? You're waiting for these companies to be allowed or uplisted to the bigger exchanges. If they're on the OTC, you have a lot less money flow. You have a lot less people who can see these stocks and get in and invest. And that's why you see when any kind of cannabis headlines hit, you see the Tilrays, you see the SNDLs, all those stocks start popping. But a lot of the times you don't see like a lot of money flow into some of the US companies, and MSOS is probably like the perfect play for that. So you're going to get your little ETF kind of play. You get your piece of the pie in a bunch of these different stocks, and you don't have to really worry about it. So personally, I like this thing under $25. I like this for a longer term hold. I would say, you're looking at 5 years plus potentially for a hold here, but I like this as a longer term hold. Look at the volume too. Now it did pop up a good bit in recent weeks, but the volume is really elevated as well. So the thing keeps kind of slowly kind of bleeding on out. And Weeble's got this little trend line, I guess. It built in. I'm not really sure why they've been adding that in, but it is what it is. And so with that little added addition, you kind of can clearly see the trend. But ultimately, under 25, I like MSOS personally. Start picking up something for the long term. I thought about it too personally. Maybe it's like another IRA idea, right? Toss it in the IRA, forget about it, add into it, and wait a couple of years and we'll reassess, once we get kind of more, I guess, obviously we're looking for a U.S. federal legalization at some point to some degree. I think it's going to come at some point. No guarantees as to when exactly that's going to come, but, always speculation. But then ultimately, I think that's going to be a longer term play for a lot of those companies as they're going to probably grow quite a bit in the next decade. Obviously, we need that legislation to pass at some point. So you'd think with Democrats in control, higher chance, and then you kind of now have, I guess we have like midterm elections or whatever we have coming up in 2022. And then you have the next presidential elections. So as crazy as it sounds, like we're getting back into kind of that cycle. So if it doesn't happen sooner, maybe it doesn't happen right next if we see maybe more Republicans take over. Who knows, right? Who knows what's going to happen there? A lot of speculation that, with how things are going and how things have been handled, a lot of speculation that there could be, this could be kind of like I don't want to say a shoo-in, but it could be a decently red next couple elections. Who knows? I'm kind of seeing both sides, right? And you kind of get a sense, yet when you kind of have Republicans in control, okay, it's like, okay, we hate them, Democrats win. And everyone's like, well, and now, you know what? Democrats promised this, and it's like, oh, I don't like how this is going. Let's go back to Republicans. It's like a back and forth. Like, it's like we just need some kind of stability, I feel like, But, it is what it is. All right, let's see. Let's see. The IBB hat, it's right up. Let's take a look. I'm going to cut back through some of these. Biotech fund. This is interesting. Biotech, here's IBB. And this is actually had a nice little Friday. XBI is what I like to look at for the biotech ETF. XBI kind of bottoming out. Look at XBI. Look at the volume on XBI. It has really been coming in December. So I think we could be setting up for a bigger move on XBI. This could be getting loaded by big funds, and who knows, right? This could be setting up. Again, do we have to hit all-time highs this year? No, we don't. But if we get a move from where XBI is now under 120 back up into that 135, 145, 150 range, that's a 25% move. That's a pretty substantial move. If we get that, a lot of those small cap bios will start to kind of pick up off the bottom. So the question is, though, here, right? We had this hard sell-off, and then it starts to consolidate and trying to bottom out. Did we bottom out, or was that a fake out, and are we coming right back down lower? Just because you go to futures right now and you look at futures and you say, oh, man, they're down, Just because you look at futures down tonight, before the market even opens tomorrow, seeing that they're down does not mean that it's the end of the world. It does not mean that it's going to be a huge red day tomorrow. No, we could easily open up down and then rebound and come back up to even by the end of the day. You saw what happened on Friday. It was kind of wild, to be honest. So we go to look at SPY. I'll pull it up. On Friday, we take a look at this. It was down, right? It finished the day down, but it had this little, hard pull off at the open, and it started to come back, and it looked like it wanted to go almost green. It didn't quite get there, but it looked like it wanted to go green, and then it kind of pulled back and consolidated and then finished off a little bit lower. But across the board, you could easily see a open low and then bounce right back and go, right? That could easily happen on the S&P. IBB up, yeah, that's been solid too. Sell calls, let's see. Digging spreads lately. Yeah, that has been a solid play too, especially some of these spreads, especially if you guys aren't familiar with option spreads. I actually have a bunch of videos that I made on the TC trading channel. There should be a link down below. There's a whole options playlist there as well. Try to make a video at least once, twice a week right now, ultimately at least once a week going forward as I have time. But the option spreads have been a lot of fun. So you can kind of play stuff and play for stuff to kind of finish the week in a range. If you get a really big move on Monday or Tuesday, many times on some of these stocks, they won't make much of a move the second half of the week or the last couple of days, or they'll kind of retrace a little bit. Like you get these kind of big moves and then everybody kind of funnels in one direction. And I think that might be the situation with AMC. We shall see, right? I grabbed a put as a hedge, just one. I didn't go super heavy in it because, of course, you're playing AMC, right? This thing can easily go to $40 tomorrow or next week, or it could be back down to 25 or lower, right? So I'm playing for the hedge of, okay, it had a massive day. It's at resistance. I can see this thing pulling off. If the market's red, it can easily pull back with the market, and we shall see where it goes, right? But the same idea here is that you get a huge move on AMC one day, right? Chances are, after that huge move, you got so many people buying puts, so many buying calls. These option premiums are so inflated that what's going to happen? That theta, that time decay, is just going to kill these things. And it's so easy to trap a lot of people in who buy just out of the money, just in the money, all these kind of levels, and the stock kind of doesn't go higher. It doesn't really drop too much, and it kind of trades sideways, and then you kill everybody who had options that were a few dollars or a few points up or down or in or out of the money from where the stock's at. You can kill a lot of that off. And so selling options, selling covered calls, especially on AMC. There's a lot of people who are bag holding AMC from way higher. A lot of people who have great averages too. So again, you have both sides of the story there. But if you're being realistic here, if you had, let's say, 100 shares of AMC, let's go to the daily chart here. If you had 100 shares of AMC and on Friday this thing went crazy, right? There was probably a point on Friday where you could have sold some 31s, 32s, $35 calls out to let's say the end of this week, this past week, or go to sell some 40s or even 50s out to next week or 2 weeks out. Chances of that hitting fairly low. It could obviously go, but what are you going to do? You're going to capitalize on that premium and you're going to hedge your downside. So if AMC falls off, you just sold an option contract for a really juicy premium because you got a really big move in the stock. And then guess what? You're selling that to somebody else who may end up getting screwed because they're buying that after a pretty big move's already been made. And then the stock just kind of flatlines or pulls back and retraces a little bit the next couple of days, right? That's kind of the idea. People don't like to think that way because they like to get behind a stock and say, okay, the stock is going to go to the moon and that's it. But there's a lot of things you can do to make more money or to kind of hedge your downside, even if you're a bull, you're an ape, whatever you want to call it, right? At the end of the day. Let's see. Rolls Royce. I personally have, honestly, let's see. RYCEF? Rolls Royce. Let's take a look how this thing has done in the past. So this thing, remember how this thing kind of pulled back super, super hard and then it started to kind of curl on up. It does look decent in terms of the curl that we're seeing. Let's look at the daily chart here. Yeah, across the board, if it can hold up here now in the 150-ish range and not drop too much lower than this area, kind of what your kind of area we're watching right here is this zone, kind of right in here. If it can hold up in this range, I would say under 125 would be ideally kind of your cut point. But if it starts to hold that level and start to curl, I don't think it's a terrible idea. I haven't done the due diligence in the stock though, but why not? Chart doesn't seem terrible. It's building and it has just pulled back a little bit the past couple of days. Past couple weeks, off of its highs, up over $2. Debit spreads in 2023 on some of those recovery plays. Yeah, that's a good idea too. Kind of cap some of those. You can kind of cap your downside with some of that stuff too, which is helpful. Kids hit short into the top of these momentum plays and get squeezed into oblivion. MSOS looks good too. Yeah, I think that's a solid play. Beat down mid and large cap stocks, waiting for key resistance levels to be broken higher before they play out. Yeah, well, we'll see what happens. I mean, that's a great thing I think about this market is that I don't really anticipate, and I think even Powell said it too, that money's not really necessarily leaving the market anytime soon. So if there's still money here to play, right, you'll see rotation. And so we kind of have seen money come out of small caps about, I'd say, 6 to 10 months ago. And it really went into those large caps, the mega caps, and they had great years. Now we see that probably rotation out of those mega caps at some point, which is going to probably pull down the overall indices, but it's not necessarily a full, story for the overall market because even though money comes out of those, it's probably going to go somewhere. It's probably going to go somewhere. And where could it go? It can go to a lot of those even there's some large caps that are beaten down, but it's probably going to go to a lot of the mid and small caps that have been beaten down quite a bit at some point. At some point, that's what we're going to see. AI stock. AI stock is interesting. I remember people talking with this stock saying it can't hold its gains and it's this, it's that. Let's take a look. It seems like it has decent news and it kind of, or every time it has good news, it kind of gives it back, at least from what I've paid attention to. Look at this. Okay, so ever since the earnings report we had right here, 58 million rev on the last earnings. Ever since then, we've gotten a lot more volume. Okay, so across the board, a lot more volume, and the stock is pulled back, but now it's consolidating. So if this can kind of hang out in that low 30 to upper 20 range and not break new lows under 27.50, looks like it could be a decent play for a possible move. I don't know anything about what's behind the scenes, the growth story behind here. I don't know that. I haven't looked into this one personally, but I've seen it a couple of times not popping up, so it's probably worth looking into soon, relatively soon, right? But I think a 50 SMA move up into which is right up around this 41, 42 is not out of the question. Not a terrible play for a bounce back to the upside. So the volume's there. Stock's pulled back. Now it's consolidating and the volume is staying super high. Could be signaling we got a bigger move coming at some point when that volume really kind of builds, right? So we can't talk about AMC after selling 6K 190. I think I had the thing. I forget exactly what I have, but I remember I sold it before around probably 5 or 6, maybe that's it. I don't think I held anything more than that for that thing to blow up. But I had a good amount back in the day. It was wild. It was a wild time. We shall see, how that plays out, how that holds up. Let's go back to futures really quick and talk about how futures are holding up here. So not as bad actually. They're trying to come back a little bit. We came back on. Small caps were down a lot more. We had tech down more. So now 0.5% less. I mean, to be honest, if we see a pretty big, nasty overnight, or see futures kind of dump overnight and then market opens and the dips get bought up, that's a good sign, We've been kind of seeing as of late, though, is that we've been kind of seeing these futures, or at least in prior weeks, futures up overnight and then the market opens and it gives back all the gains. Sometimes it even goes red. That's been kind of the sign that every time we kind of push up, and let's go to SPY really quick because this is what we've been noticing. Every time we push up and do that, we kind of pull back, which is not a healthy sign, which kind of, indicates, or at least leads us to believe, what we've kind of been noticing as of late on the S&P. So it happened every time. We got up into this range right here. We hit these all-time highs back here at the end of November, okay, pulled back. Then we kind of got back up into this all-time high range again. And as we got up into that, 470 to 472 resistance zone, right? Every time we got up there, we either gap up and sell off the next day. And then that's just the end of the momentum. So the best example was this day right here. You had Powell's talk. Powell comes out. The Fed talks on the 15th, and the market just recovers super strong, right? Then the next day it gaps up. It looked like it was going to be market was super green. Futures were green. Everyone was like, "Oh yeah, here we go. It's going to be an awesome all-time high rip face. Santa rally's coming. Here comes Santa with his bags, fully loaded, car. It was ready to go." And then boom, we kind of pulled back off to the downside. That entire day we sell off from 472. And we finished the day at 466. Pretty big range, right? Pretty big downside. And then we had Friday, which we pulled back even further. So we shall see if that trend changes with a gap down followed by a push up this week. That's ultimately up to what happens on Monday. We shall see. Generally speaking, though, we see a lot of times that the 15th, I saw a stat somewhere December 15th is generally, across a lot of biotechs, across small caps, generally the time where you start seeing those buyers come back in, because a lot of that tax loss harvesting starts to be done. And when it comes to the wash sale rule, 30 days starts to expire from when a lot of people start selling some stuff. And so I think we could be getting to that time where people start seeing some buyers come back in, especially going to next year. We'll see. And I also saw another stat too, where generally speaking, some of the worst performing stocks in December are the best performing stocks in January, relatively speaking. And the best performers aren't as good of performers best performers from December aren't as good in January. So we'll see if that continues or if that trend kind of happens again going into January. If that does happen, where is the money going to flow? If that does happen, if that kind of stays true, then a lot of the small to mid caps, those high growth plays that have been beaten down, should bounce decently in the next month or two, right? We'll see. We shall see. Silver and gold. I'm seeing what I have. Goro on here. Did I see Goro somewhere? It was a gold stock, I believe. GORO. Gold resource. Let's pull up the daily on this thing. Yeah, I mean, it's right back into kind of the support we had, 150s from... I got some lines here. I must have looked at this stock. I used to look at this stock a lot back a few months ago. 150s or so is your support. So you're pretty close to that level too on Goro. Let's see, FSM. 320. This is starting to kind of potentially bottom out. Volume has been decent since the last earnings. Relatively speaking, it's been a little bit elevated since, prior months. Let's see, this thing is pulled back. It's down here, hit down to 291. It's over 3. If it can hold over 3 and hold up momentum, that's decent, right? Or not momentum, not nothing it has much, right? But if it can hold over 3 and hold up, relatively speaking, after this little dip down here on the 15th, followed by a little recovery. And that's kind of the story, I think, with a lot of small caps, is you kind of have a lot of them that dipped hard right before Powell spoke. And then after Powell spoke, we started to see some of them catch some bids. And what I mean by that is some buyers started to come in a little bit here, a little bit there. And you're noticing a lot of these bottomed out biotechs have been starting to get some more volume, starting to get loaded up. So some of these plays start to play out. And this is a silver mines company, but one of these I have been always watching is Lode, LODE. Another gold mining play. I believe they mine more than just gold, if I recall. But here's gold. Look at this. Lode, look at the volume on Lode the past couple of days. Look at how much, this isn't like a ton, right? But relatively speaking, right? Look at this. We got a little bit more action. If you go back into the earlier days in December, not too much volume. It was pretty dead. Now all of a sudden, a couple of these little, volume spikes, Lode starts pushing up, even or not in terms of volume, even though the stock is still kind of relatively low. This thing has gotten destroyed. I mean, this thing was trading. I remember this stock way back when it was up around $1, okay? And I had it back there, and I sold it on the first sign of a spike up into like the 140 to 150 range. And I was like, awesome trade from the ones to the 150s. Great, right? Nice, like 50%. And then the thing ended up in the coming weeks, decided to go a little bit more than 50%. The thing ended up going 600%. And I was like, really? It's part of the game. But again, now hindsight, right? That was back in February of 2021, right? This year. And that was kind of the peak. When Lode literally hit that 985, that was the 17th. That was probably like the literal peak of small caps. And ever since then, it's been just downtrending with small caps. And now it's back to under 150. Crazy. I mean, I don't think it's that crazy at the end of the day. But, realistically, because of small caps, a lot of these things are honestly, a lot of these companies are trash. But chart-wise, there could be range there for a move back up into the $2 area. Who knows? Maybe that 200 SMA up towards 3 could be a spot on Lode to watch for a look, So this is one of those plays I like to come to when we see some of the, silver and gold miners and all that kind of good stuff. I like to look at Lode. It's at least one of those I always have on my radar personally. Neo right at support and Neo day was solid. Let's take a look. Okay. Question is, do we get to sell the news after Neo day? Neo is in a very interesting spot. We could see Neo easily come back down and go for more lows. This thing has seen some pressure. It's just been consolidating for so long. I'll probably have to do a video relatively soon on the stock trends channel, diving into the key levels, technicals, all that good stuff on Neo relatively soon. But I mean, here we go. I mean, this thing is under $30. It hasn't really done this. And, the pressure on this thing, I'm not surprised that it's pulling back this level. I'm surprised it didn't happen sooner, to be honest. I'm surprised it didn't happen in the prior couple weeks, months, right? Because it's been kind of just hanging around and consolidating for a while. At some point, this becomes a very interesting play. And of course, the China fears and all that good, may get bad stuff, whatever you want to call it, all that stuff, yeah. But at some point, this becomes an interesting play, valuation wise. If we keep seeing the EV explosion that we're seeing, in China and the US, at some point it's like, wait a sec, NIO is under $30. This might be interesting for a longer term hold, right? So NIO is a stock I think that has just absolutely trapped tons of people. Now, realistically, should you have lost a ton of money on NIO? Unless if you're playing options, it doesn't matter what stock you're talking about. Any small move could be a big win or loss. But if you're someone who has like a longer term vision, you should be looking at this as like, I'm going to buy these dips. If it can hold $30, it's great. If it can't hold 30, I mean, we could see this thing back to 25, and who knows, 25 or even lower. We'll see what happens. Kind of have this area here. I think 25 is the next key level to watch as support if 30 can't hold on NIO. Although I would imagine that this thing gets, if we have a green day, it gets bought. If not, though, this is going into tomorrow. We can easily see NIO under $30 if these futures hold up. So they're coming back up a little bit. They were worse when we originally started the stream, coming up a little bit. But if these hold or go lower, NIO is definitely not going to be a fan. Probably, I would imagine NIO is probably going to be red on Monday, tomorrow. So we shall see. Started around this time last year in the market, and it seems a bit slower right now. Oh, it definitely is. It definitely is 100%. The thing is, though, at the end of the day, it just means you have to adapt, right? So personally, right, I've been using the past period of time, right? I had a great time this time last year, was a great period of growth into the early part of this year. And then it was just literally because we had too much crazy action that now looking back, hindsight, I've never seen anything like we saw last year. Never. Right? And obviously I'm only like 23, so how many years of experience could I possibly have? Even if I got into things, I haven't been watching small caps really until like 3 years ago. But even that, right? I had never seen the movements that we have seen in small caps this period, December through like February, mid-February of last year. But all you really need at the end of the day is 2 months. So maybe this year you get a 1 to 2 month span of like January, February where things are super hot. A lot of money can be made in that period of time, and then you can go and take that money and reinvest somewhere else or stash it away into some other, large caps, some longer term holdings that you don't have to worry about. Maybe you're looking at like airlines, who knows? Maybe small caps get hot, airlines, and there's COVID fears and all that stuff, right? And you're like, wait a second, airlines are going to be a nice rebound play. You take your profits from small caps for a period of time and you toss into the airlines and you kind of sit back and do your thing for, 6 to 12 months. And so you can kind of see that same kind of cycle. That's one of those experiences. Now, hindsight, if I ever see a hot market like I saw this time last year, you darn well know I'm going to have my size increase. I'm going to go hard while it's here. And then once we start seeing that stuff fade back off, or we start noticing the telltale sign, which at the time I didn't know what to make of it, but now obviously if this ever happens again, I know what to make of it. I was literally looking for stocks, and I'm like, I can't find any bottomed out plays. All these stocks are either 50%, 100% off their lows, curling on up, already got news. They're up 500% this year, off of lows. I'm like, I can't find any bottomed out plays. There were like no stocks under $1 anymore on the big boards, right? NASDAQ, Amex, New York Stock Exchange. I was like, what the heck is going on? And I was like, is my style done? Like, can I even use my trading style anymore? And at that point, it was like, oh, yeah, no. That was the sign to get out of everything, right? Stop right now while I'm ahead, right, in a sense, and look for opportunities to the downside. Short some of these stocks, and that would have been an amazing, amazing play, right, into this year. So, whenever you kind of get to that point, and then now, here's we're on the flip side. We're on the reverse side. With a lot of these small caps, I'm at the point now where it's like, there's so many. I could just start buying this and this and this. I'm like, these are all undervalued. These are going to spike. These are going to go. These have this catalyst, that catalyst. They're going to go. And insider buys, like all this stuff. There's so many. So build those lists now. And once the market kind of gets a little more stabilized or it starts to heat up, for small cap land, there could be a lot to play off of. Again, just as there was so much that was so high that you could have played to the downside. And, funds, big money, it's really what it comes down to, right? Where's the algorithm trades, right? Where are the algorithms? Where are they sending volume? Where's big money at? All that stuff, right? We saw that they were in small caps and they made tons of money. And then when they want to short and make money, they're going to do so. But what are they going to do, right? They run these things to oblivion to the point of like, oh my God, they're so exhausted to the buy side. These things blow up. And then we take them all the way back down, below supports, even further down, below cash levels, and even further. And let's juice and make a little bit more out of that let's squeeze that last couple of drops of juice out, right? Make the extra money. And then boom, that's the reversal point. That's when the things start to bottom out. So we'll see. I think we're very close to that point. And if not already there, we shall see. Grow gold, crypto, NFTs. that's been the progression, I think, for a lot of people. People getting into a lot of crypto, NFTs. Well, actually, I'm curious what Bitcoin's doing these days or these hours. I mean, I always generally have a feel for it. It's at just under 47K. I mean, it's at a pretty crucial spot. If Bitcoin can kind of curl off of where it's at right now and bounce, go back up to 50K, great sign. If not, I mean, I think we're going to see lower 40s. And if not, I think we could see back into the 30s, even maybe down towards 30K again. If this is the short-term top for Bitcoin for now, we shall see, though. Needs to kind of get back up and hold these levels right here. You don't want to see it dropping too much from here because then it starts to the momentum's just not there. Check out the pain in lots. Straight bag holder. Oh my, let's take a look. Car lots. Here we go. Oh my. Ouch. This thing is down to like what is this down to? 235. So that's the one thing that I've also been kind of wrestling with, right, too, across a lot of different things. I've been wrestling with that idea of like, obviously there's the bag holder mentality, right? And it's when people buy a stock, the way I've originally seen a bag holder, right, is a perfect example. I'll go to a perfect example. BBIG. BBIG is your perfect example. Let's see where it's at. It's at $3. It's actually kind of holding up in the low threes, which is interesting. But tons of lines here was when this one was going. We're kind of watching the key levels and all that stuff. And I traded a couple times up and down, long, short. But this thing was like prime bag holder, zone when it was up in the over 5, over 6. People buying this thing with an average up around 6, 7, 8. Didn't sell at 12. Comes all the way back. Maybe they averaged down a little bit. Then it pops back up towards that 9. Didn't sell there, or if they did, that was kind of your time, your chance to get out, and then it kind of pulls back. The way I see a bag holder, like the way that I originally have kind of seen it, is that a stock makes a big move, and you come in not at the bottom, not early. You're in after a really big move, and that's to the order of 25, 50, 100+%, depending upon the stock. You buy it way up, and then you hold it all the way down. Right, you hold it all the way down. You're thinking it's the next best thing. It's this, is that. You're buying that initial hype. You're buying that initial play, that initial hype. If it is, it's a long-term hold, and you better be willing to hold this thing long-term, and you better have your due diligence under control. You better know what's coming on the earnings report. You better be following this company so you know, are they progressing at the pace or the rate you're expecting, right? Because that's why we're holding this thing. That's why you have a long-term vision, right? And if not, you got to cut that thing off. Personally, I'm wrestling with, I understand when you're buying a stock that you already see as undervalued, that it goes lower. Could you be classified, and are you classified as a bag holder? I think yes and no. For some people, I think very much yes, if you have no plan. If you have a plan and you're buying the stock because you believe it's undervalued as of right now, or you believe that there'll be a move higher because of a catalyst, because of this, because of that, then I think that there is certainly something to be said for holding something that is down 10, 15, 25%. Obviously, do you want to be holding something that's down 50, 100%, almost 100%? If you're playing options, that's a different story, right? You got to be willing to play those ups and downs. On certain stocks, I think it's not, if you have a plan in place and you understand the fundamentals, and understand the company, and you at least have an exit plan if it's not going to work out, when do you cut it? Then I think it's okay. But you just have to make sure that you're not buying a penny stock all at once, which is kind of one of those things that I've always preached, is that if you're buying a penny stock, please have at least 2 or 3 position adds, right? So if I buy, and you always hear people say, I'm buying a starter, right? So I will buy a starter, and then I can add double, triple my position, or even sometimes I can, when I buy a starter, it's roughly about a 4th position size. So a fourth of a max position size is a starter, right? So for me, it's like, okay, well, if I buy a starter, I can always buy more and I can buy some more. So if the stock drops 10%, I can add. And then now I'm only down a few percent off of my average. And so if this thing makes a 25, 50%, 100% move off the catalyst or off the news or whatever I'm looking for, then you can do just fine. But it's when you get down 50+% that you're screwed. So you should never be able to get to a point where you're down 50% on a position and now are bag holding, hoping for this thing to come back to break even so you can sell. That's the difference. So you can enter a stock that maybe goes down 50% from where you originally entered, but if you're playing this thing, you understand what the stock is, you understand the movements behind, you understand what you're buying into, there's reason to believe you can be getting out just fine with the proper risk management, with the proper ad zones. That's one of the biggest challenges I think a lot of people have when they're playing small caps or they're trying to swing small caps, because they got in such a horrible habit last year where they would buy and then things would just go up. So for me, what was kind of my, I guess, downfall in that, even though I did well, was that I never got the chances to add, right? I don't like to personally add up, average up. I like to average down. That's just kind of my style and strategy, whether it's a day trade, options, whether it's penny stocks, it doesn't matter. I like to average down and have cash available to average down personally, right? So I never really did. So I would enter with starters and the stock would go 50%, 100%. And I'm like, well, I'm taking profits where I'll be scaling out along the way, right? So I never got to add a full or a heavier size, which would have ultimately made a lot more money, right? But, hindsight's 2020. Now you have that experience behind you. So if you see that type of market again, you can capitalize. We shall see. Exactly. Hindsight is 2020. Used cars are at record values, though. I understand one. Yeah, that's the thing, too. I think lots is one that, honestly, I haven't looked into the fundamentals here because I have been seeing, or at least I remember seeing the news behind this thing, and it didn't look looked decently positive. But the stock keeps selling off lower and lower because it was kind of one of those, SPACs, right? That, was it a SPAC? Yeah, it was a SPAC. And then it got kind of hyped up. Social media, you got the Twitter pumps and whatever, all that kind of stuff. And to be honest, now you're getting to a spot where it's like, at some point, it's probably worth a shot. You almost probably can't lose if you're looking to buy something like this with a couple month, time frame. You could easily get, a 50 to 100% mover. I mean, look at this. You do the math on where this thing is at. If this thing goes 50%, that means the thing has to go to like 375. It's not out of the question, guys. It was literally just there like a month ago, right? 2 months ago. So it hit 475 like a month and a half ago. So it can do it, right? It can easily make that bounce. It's getting to a point where it's like, at some point, something doesn't make sense. Let's take a look at this, though. Let's go to look at, I'm curious, because this one interests me in the fact that we have those used car sales kind of doing really well, right? Past couple of months. Even the past year, they've been doing really well. So why is this down? Let's take a look. We have a market cap of $285 million. Sales of $175 million. So something here is this is seemingly getting down to a decent value spot. Just looking at kind of the price to sales ratio, 1.62, price to book, price to cash. Cash per share of 1.81. This is starting to get lots. Honestly, is getting down to a pretty interesting value spot. I would agree with that personally. Under $3, I think is pretty darn decent if you're willing to hold for a few months. Let's see. I'm holding some now. Should have sold on that force. Yeah, I understand. But if you can average down, to be honest, I don't think you can. With obviously the market, take that into account, right? Market's red. Yeah, probably not going to help. But if we see some money flow back into some small caps, the second that happens, some of these things that are down towards these crazy levels, they're going to bounce back, I think, pretty nicely. You can probably easily see a 100% move on lots with decent momentum. I think we can see that. I think you probably get at least 50% on this thing, if not more, at some point. Even if it's a longer term hold too, I don't know. Is this kind of a model? Is this business model? Is this going to be a longer term play? Maybe. Could it have some worth and could it have some value? I think it's possible. So we shall see. I'm going to wrap things up here, guys, because we kind of covered a lot of stuff across the board, but this will stay up on the channel like always. Right now we're looking at futures. They're pretty red across the board, but not terrible. Down about 0.5% across the major indices. Small caps down 1.5%. So we'll see if that holds up to be true, because then it's going to be the dips right back down on small caps. We'll see. But I want to do more lives. So if I can do some more lives during the week, I'll definitely try to do more of those going forward, because it's fun to do, especially as things are happening when the market's open. If I can do like a market close or something like that, if I have some time, that's definitely what I want to be doing. So I appreciate you guys for tuning in. Thanks so much for watching. Tons of stuff we talked about through the video. So you want to go back, if you're tuning in now, go back to the beginning. You can come and see or watch all the stuff we talked about. We talked about Zoom, kind of the price targets and thought process I have on Zoom this week. So appreciate you guys like always, and we shall see you in a future video. Peace.